Okay, good morning, Checkmate crew. It's the opening bell of the New York Stock Exchange at 9:30 a.m. on this beautiful Tuesday morning, October 25th, 2022. Yours truly, Mickey Blindside here with your market memo. Okay, so looks like we're continuing our rally. Remember a few days ago, around here, remember how I said, and it's just not me, but also some of the major investment banks. I think it was Goldman Sachs. They reported that that put volume by retail was at its highest ever volume, and most of that was in 0 to 2 days till expiration, and pretty much they got wiped out. So hey, I've warned you guys from before. Bear markets tend to destroy more bears just because of the bear market rallies can be very vicious and it can be very sudden. All right. So this is why, in low liquidity markets like this, I prefer to wait for higher quality zones to either short or go long, or to place any trade. This is why I'm patient, because this can literally wipe out any put position right here. Okay, so again, retail record high put volume around here, and they just got eviscerated. All right. As far as my plan still hasn't changed, except with one caveat. I did notice something in our liquidity data, so let's start with that. One of the things that I noticed, especially in our junk bonds ADL line, is that we're seeing some divergences happening. Okay, so this is our junk bonds advanced decline line. Every day I go and I record the advances versus declines in junk bond issues, and that's helped us really in looking at whether or not the rallies are sustainable. And generally, if you want the rallies to sustain for more than a couple of weeks, you really need this line to turn up. Okay, and by turning up, we also look for 4 advances in a row. Okay, so there's a little bit of a divergence since about October 12th. The S&P 500 has been going up, but our junk bonds advanced decline line is still declining. All right, now we've had 2 advances in a row. So if we don't get 4 advances in a row and this junk bonds ADL line still keeps going down, and at the same time we hit 3,900 or so on the S&P 500, I may enter 3 to 6 month put debit spreads at 3,900. Okay, so a little bit longer dated, just in case if it does get to that 4,100 zone above our delta neutral. Delta neutral is still around 3,900 to 4,000, so it could overshoot that and go to about 4,100. So that's my original put buying zone, is that 4,100 to 4,125. That's the plan we've had for weeks now. But again, if I see that this keeps going down as the S&P 500 hits 3,900, I'll enter my puts a little bit earlier. Okay. Now, if we get 4 days in a row, so if we get 2 more positive days, 2 more days of advances over declines on our junk bonds ADL, then no, we're going back to the original plan of waiting for 4,100, 4,125. Okay. So I just wanted to add that to my plan. So it really depends on this liquidity signal right here. If this keeps going down, generally these kind of rallies are not really sustainable and they'll reverse pretty quickly. All right. And I imagine it may reverse back around the delta neutral zone once it starts getting delta neutral around 3,900. So that's where my levels come from. It's all based on options positioning, and also the trigger is based on the liquidity data. All right. So that's our junk bonds advanced decline line. I mean, since we're talking about liquidity, we might as well talk about the New York advanced decline line. This is not New York advanced decline. This is New York Stock Exchange high-low line. Okay, we'll look at the NYAD next after this. But it's still decreasing. And again, we don't really get into any type of long-term bear market, so a bear market that can, a long-term bull market, we don't see, usually we do not see a very long bull cycle. So, even in this long-term bear market, we could see a mini bull market that lasts for months, perhaps even quarters, but that is not sustainable if this does not turn up. We need to get more highs over lows. Okay, and so part of our mother of all buy the dip signal, our MOAB signal, is higher highs, higher lows on our junk bonds ADL line, but also our high-low line. We want this to curve up. Okay, we have not seen that yet. If we want to see, remember in the summer how we had that rally for a few weeks, we need the line to at least flatten out. But I'm not seeing that. Okay, so we'll see. We'll see what happens today. Now the New York Advanced Decline line. The New York Advanced Decline line is trying to make a low and it's trying to advance. We'll see if that can continue today or not. All right. And then also to our equal weighted S&P 500, it's going up as well too. And again, I think our main liquidity signals though is the junk bonds ADL and the high-low line. Again, really nothing has changed. It's still in a downtrend. So I'm more inclined to short the rallies than I am to buy the dip in this market, especially in the U.S. indices. Okay, until those liquidity patterns change. All right. So on Friday, I also closed my short puts, my short 366 puts for November. We got some good gains. I have about a little bit over. I made about 15 points per contract. So per contract, that's like $1,500, which is pretty good. For about 3 weeks, very minimum risk, very low management. Don't have to day trade. Don't really have to look at my screen all day. That's been very good profits. And the reason why I got out on Friday was because of our liquidity signals. And not only that, but also bond market signals. So let's go to our bond market signals as well too. One of the things that I got worried about was this TLT. It looks like it's coming back down, but this on Friday was pretty scary when I saw this. When I saw this leap up like that, pretty much right now, in order for this to not be a big inflationary signal, we really need to see this as a false breakout, which means this week, this thing has to come down quickly. All right. This really does have to come down quickly. If not, I think the markets are going to take that as inflationary times are yet still ahead. But we'll see. It's just one day. If you actually look at it on the monthly chart, all right, we still have about a week left. So if by this week it can close all the way back down here and close out the month back at around our box level right here, all right, that would signify a false breakout on the monthly chart, and that would create this huge wick on the monthly chart. And I would suspect that at that point, TNX would also fall too at that point. All right, and that might be bullish for stocks, especially the QQQ, okay, especially the NASDAQ. So we'll see. TNX is still a very important chart. I would say this is one of the most important charts that you're going to see this week. If we see a huge decline in this, and at the same time TLT really breaks down, that could move markets up. And so again, this is part of our liquidity signal as well too. I'm grouping in the same category as far as knowing when to short the S&P 500. If our liquidity data turns up, as well as TLT really breaks down and TNX also comes down too, then of course I'm not going to go ahead with that put buying at 3,900. I'm going to be patient and wait for our zone at 4,100, 4,125. So the main plan is still that 4,100, 4,125 that we've had for weeks. But again, if TIP TLT keeps going up, if TNX keeps going up, if our if our liquidity data still is going down, then I might go ahead and just preempt that just a little bit at 3,900. That's all. That's the only change, okay? And it's really based on this data. And this was what got me out of the SPY short puts, the cash secured puts that I had. I can always re-enter that if the market comes down. And so I just wanted the capital available for me just in case if the market just, tanks, I don't know, after an ER or something. Speaking of which, Apple is going to have an ER this week. I think that's going to be the ER to watch is Apple. Pretty much the important thing here on Apple's earnings, Apple had all this slew of bad news. The iPhone production is going to go down. They have supply chain issues, all of these things that they came out recently. But I think what Wall Street is really looking for is share buybacks, okay? Is Apple going to do its own version of QE for the NASDAQ, pretty much, all right? And that is going to be what people are looking for. Is Apple going to buy back more of the shares? And if it does, I suspect that it rallies. Okay, it will rally and probably take QQQ with it. All right, it'll probably take QQQ with it. We may see QQQ head up to this zone right here, around 293 or so. All right, and that would definitely send the markets up to that level that we're talking about, that 41.25 zone. It will definitely take it up to that zone. All right, so we'll see. Again, that is just a very nice zone. That 4,100 to, let's say 4,100 to 4,150. Okay, but that is a very, very nice zone to short. If the market gives us that'd be such a gift. All right, that's a very good reward to risk setup. Okay, because here at this point, you're already above all those in the money puts. So if it keeps going up beyond that, then that new fresh money is entering into the market. So that means you're wrong. All right, and you don't have to face a huge drawdown to know that you're wrong. So that's why I love this setup right here where we're shorting and being patient. Because if we're wrong, we can just exit for a very small loss very quickly. It's really hard to do that anywhere else, right? If you short here, well, options movement could still allow us to get over that into like the 4,000s or 4,100s. So you're not sure. You'd have to face a bigger drawdown to know that you're quote unquote wrong. All right, and that's why for me that this area, this zone right here, is my preferred area to buy puts. Okay. So again, that really just depends on liquidity data. It also depends on our bond data as well too. But again, it looks like TIP TLT is coming down, and it looks like TNX, the 10-year Treasury yield, is falling. So that is a tailwind for risk assets. Okay. So that's the S&P 500, as well as our, some of our stocks in our plan. HUT is going up today. Oh wow, look at that. HUT's going up, and again, I should have sold some covered calls here, but didn't. I'm still waiting for our higher levels to sell some covered calls. UUUU, wow, it's over our $7 mark. Right at the opening bell, I was looking at this. It was at 680s, and now it's already at 715. That's quite a move. We'll see if this is sustainable or not. I'm guessing UUUU is celebrating from Australian dollar coming up. Yeah, Australian dollar is rallying hard. So there's some news about China reopening, and that is sending the Australian dollar up. Australian economy is very sensitive to the Chinese markets because it's one of the major export partners for Australia. So we do see that the Australian dollar makes these big moves, and generally when that does, the metals do very well. Okay, and a lot of the uranium names are in the XME ETF. Okay, so I guess it's liking that. Ford, still part of the plan. I think they got earnings coming up this week. Oh, what's going on with Ford? Well, it seems as if Ford is not, I don't know why, but doesn't seem like it's loading right now. Okay, so that is, so you know, whenever Thinkorswim works again, maybe it's because of all the traffic and such. But it doesn't look like Thinkorswim is loading Ford. But okay, so once it loads, we'll take a look at it again. Also, let's go to crypto, actually. In crypto, I'm noticing that we're actually seeing in crypto some higher options activity, actually, for crypto. All right. Let's see here. You know what? I think my internet just went out. My internet just went out. That's what it is. Okay. So it's not Deribit or Thinkorswim. It's actually my system. My system is there we go. Okay, there we go. We're back online now. Okay, so I think that the internet just got knocked out of my place for a second there. Okay, so now we're back. All right, so crypto is actually has a lot more open interest now. We were at 5.5 billion notional value. Now we're at about 6.4 billion. So that is an increase. So, okay, so now we might see options being able to control price on the physical market again. One thing that I noticed here too is that based on gamma positioning, so we got some gamma positioning. I believe it was, yeah, we got negative positioning around 1350. So 1350 is going to be like a zone where we're going to cross multiple times, and a lot of that negative gamma is actually on the 28th, the end of this week. But we also have positive gamma in the same expiration for 1300 as well as 1400. So what could happen is that we can be stuck around this to 1300 to 1400 this whole week. All right, and right now it looks like we're at the top end of the range. Right now we're about 1380 or so in ETH, about 1378. So yes, I think it can go up to 1400, and then maybe there's some profit taking, and then it goes back down to 1300. So we might see it just kind of churn this whole week in between these two big strikes, in between and with a negative gamma stuck in between these two positive gamma strikes. All right, and that's for this week. So we're starting to see more options activity in ETH. Okay, so I think for this week it's going to probably, you know, pinball between 13 and 1400. We'll see what happens with ETH. And again, open interest is increasing on the ETH options market. A lot of that volume, a lot of the big volume is coming from the November and Decembers. I noticed that also some of our block trades in Ethereum are happening in the December contract now. Not much. I think still it's mostly, oh, we got another trade right here. What is this? I just noticed this one. This one just happened October for 1200 calls. It looks like it was paired. It may not have been paired. Actually, it may have been. But yeah, okay, so we're starting to see bigger sizes. When I checked earlier this morning, they only had these. Let's see. So yeah, I mean, yeah, we're starting to see bigger orders come through, but still a lot of it is retail dominated. Still a lot of it is in calls, and you know, I still like to see it go over that 7 billion mark, and then that options market being tied to the physical market. I think that will be even stronger relationship if it gets to about 7 to 7.5 billion in nominal value. So that is options. So that's Ethereum. Options market is coming back. We'll see how that translates. I think just based on current options positioning, it looks like we could be stuck between that 13 to 1400 at least for this week. All right. Now that we're back up online, let's go back to our plans, our stock plans. Ford has earnings this week, and again, you know, it's really hard to buy this when we're getting mixed signals and also when liquidity still remains weak. But I guess if it goes under 10 or so, that would be a good place for me to buy. We missed our buy zone right here around the 11s, in the lower 11s. But I think if we were to get to the 10s, or even in the high 9s, I think that would be a good place to start nibbling some shares long. All right. Right around here, around 9 or 10 or so, right here, this zone. I'm still looking to get into this. Intel, again, TNX. If TNX keeps going up, Intel's going to keep coming down. So unless I still see some stability around the bond market with longer yields, I am going to stay out of tech stocks. Okay. I really want to see TNX fall before I get into any type of tech stocks. TNX is down 3.5% today. So we'll see. We'll see what happens, okay? I just want to make sure the TIP TLT chart, did we see the updated one? Yes, we did. Okay, so yeah. So luckily, so we were able to see it. Sorry, we had my internet just went out in the middle of the recording here. So in the middle, we just lost internet connection there for a second. Anything else you guys want to look at? Tomorrow, for tomorrow's market memo, I'm going to take a deeper dive into 10-year treasury, and we're going to calculate certain forward-looking, forward PEs and where we might see institutional demand or institutional selling happening depending on the 10 years. So I'll have that available to you guys tomorrow, and I'll present that to you. In that case, we'll wrap this up, and we'll call it the end of our session for the morning market memo. Our Discord invitation link is in the description. Come join our Discord, be a part of a growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. I'll see you guys tomorrow. New York Stock Exchange opens at 9:30 a.m. tomorrow, Wednesday. I'll see you guys then. Have a great day.